Growing like gangbusters during the pandemic. Basically, ever since physically handing over cash, a check, or a credit card started to feel, unsafe. And analysts expect use of those platforms to keep on growing even in the after times. The research firm Insider Intelligence predicts the volume of payments done peer-to-peer is going to grow 37% this year. Marketplace's Justin Ho is on that story.
People have been paying each other with peer-to-peer payment apps for more than a decade. When the pandemic came along, they started asking businesses if they'd take P2P payments too. Ashwin Deshmukh owns a cocktail bar in Manhattan called Short Stories.
People will just say, hey, do you take Venmo? Or like the people asking us if they can send us money on Square Cash.
The reason they're asking that?
People really don't want to pull out a credit card at all. At all.
That's helped P2P apps muscle in on credit cards and other banking services, says David Yermak at NYU's Stern School of Business. Some apps offer lines of credit. Others let you maintain a balance and use it like a checking account, even receive relief checks and tax refunds.
If they're successful, they can begin to do almost everything that the bank does and sneak up on some of the larger banks.
Yermak says more poor people could get access to banking services by using P2P apps.
And in the long run, it will allow them to expand the market for financial services and keep those people maybe from ever joining the customer base of the legacy banks.
That customer base has been using P2P apps more too, says Jamie Toplin, who follows digital payments for Insider Intelligence.
The pandemic has catalyzed uptake among older customers, baby boomers especially, and that's contributing to a lot of the growth.